Let me start with the obvious question, I suppose. What are the chances that the talks actually go ahead?
Well, Tracy, it's clear that the space politically for a deal to come is fastly narrowing. The problem is that the two sides are now becoming less serious that a deal can even be reached, with the China side viewing Trump as political posturing ahead of the next presidential elections, and Trump saying China is trying to wait this out until potentially a new president is elected. But we do know that top leadership right now is in Beihai, where they're discussing very important issues, including what to do next about this trade war. And it's unclear if they're going to step up to the table in September, even though it's clear that Trump wants a deal, and as he's facing more pressure from that farming community. We've also learned that Xi is getting pressure from top leaders to remain tough and tougher amid these deteriorating tensions, amid the attacks on Huawei and these ongoing protests in Hong Kong. And clearly, the label of China as a currency manipulator has not gone well domestically. In fact, there was just an editorial in the China Daily that showed this is just another example that the U.S. will go to any means, no matter how unreasonable, to try to pressure China into a deal. And in our discussions with former economic negotiators on the China side, China does not respond well to that sort of maximum pressure tactic.
So, Selina, one of the moves that we saw yesterday was this morning was a stronger than 7 setting fixing by the PBOC. Now, it doesn't seem to have had the desired effect at the moment.
That fixing is a little bit weaker than was actually expected, but it is, of course, stronger than that important 7 level. More important to China than devaluing the currency to kind of neutralize the impact of tariffs is to not have any destabilization factors that could cause capital flight. They also don't want to make life more difficult for all the corporates in China that have growing piles of dollar-denominated debt, which also cuts into their deleveraging issues. Now, of course, PBOC also wants to get some flexibility in the yuan, so it could go a little bit above or a little below the 7 level. But we shouldn't expect it to weaken too much further. In fact, Bloomberg News just reported that senior PBOC officials have been meeting with foreign companies to assure them that it's not going to weaken much more. Of course, those companies are concerned that if the currency does devalue a lot, that the imports they use for production in China is going to be a lot more expensive. But lastly, I do also want to point out that many analysts think that even at the 7 level, the currency is overvalued. In fact, I spoke to an investor this morning who said that the level he thinks where it would be accurately valued is actually at 7.5, just based on market forces.